It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is tax season. And so we want to make sure that you get everything you're entitled to. So we want to make sure that we cover everything, all the changes, how this affects that, how you should maybe do this rather than that, because it's all different this year. And anyway, I'm joined in studio with Christopher Fabian. Hey, Chris.
Hello, Esther.
And Tiffany Fabian.
Hey, happy Saturday.
Happy Saturday to you. So, our offices open up on the 19th, right?
Correct.
And the IRS is taking returns as of the 26th. So the IRS is the 26th of January. We'll be open on the 19th. Our corporate headquarters on Colvin is open every day, except for the weekends. And as soon as the 19th happens, we'll be open 9 to 9, Monday through Friday, and 9 to 5 on Saturday. So, but if you're somebody that wants to get your taxes done now and you have everything, we want to talk about that too. You know, we have everything all set up, and we just get you warehoused, and we get you sent as soon as possible.
Sorry, I was at the office the other day, and there was a person who had an appointment with Chris, and she wanted to reschedule her appointment coming up in like 15, 20 days because she won't have her Social Security statement, and she wouldn't.
But she will.
Right, and so I was reassuring her that we can still get it done, and we don't have to reschedule.
Well, I want to talk about that too. All the things that you need for getting your taxes done, and you really want to make sure that what you do is a complete and accurate return, because if you miss something, it can hold up your refund, or it'll generate an audit in the summer, and you're going to have to pay penalty and interest. So, you know, but of course we're here in Western New York. We have 32 offices in Western New York, and we're also broadcasting in Naples and Marco Island, Florida, and we have an office on Airport Pulling Road. So we join with our Floridian listeners as well, and they can call in too. 8030930, 8030930, star 930 on a cell phone. Our long distance phone call 716-8030930. We'd love to hear what you have to say. Whether you want to text us or jump on the phones, we'd love to help you. Last week we talked about, was the state of New York going to do tips and overtime as a deduction. They are not on 2025. So when you do your 2025 return, if you took the deduction for tips or overtime, you want to make sure that you add it back into New York State. The governor has said she is going to allow and put in her budget for 2026 the tip deduction.
Right, it's proposed. So if her budget gets passed, then for 2026,
right. But
tips will be right. I
but
know.
It's not for 2025.
Right. Yes.
All right. And then the other thing for 2026, because we're in 2026, gambling is going to be only partially deductible this year. In 2026, 2025 is okay. If you have gambling winnings of $10,000, you can take gambling losses up to your winnings of $10,000. Starting next year, though, when you're and I wanted to make sure I got people to understand this. Not everything's it's going to make it even more taxable than it was before, and this is such a bad thing for seniors, isn't it?
Oh, it is. It is, because it's limited to 10%. Well, gambling itself is bad for seniors, especially if they don't itemize. But the ones that do, they're going to end up paying tax on 10% of their winnings. So it is going to impact them a little bit.
And what happens is, though, it makes your Social Security more taxable, right? even with the $6,000 deduction, your Social Security can be more taxable because you have to include your winnings as income. You don't take the expense until you itemize, so it's just not a good thing for a senior.
Nope.
It
And it
really,
can-
this year especially, in 2026.
Oops, sorry, it can infect your enhanced star and your IRMA, and so there's just the snowball effect, you know.
All right, and then on 2025, the Trump account is something you need to put on your tax return. It's for taxpayers who had a baby in 25, 26, 27, or 28. The babies are going to get what's called the Trump account, but you have to apply for it, okay?
Yep.
And when you apply for it, that means that they're going to deposit $1,000 into the baby's account, and you can contribute to it for 18 years. But these kids will get $1,000, but only if you apply for it, number one, and number two, it won't be deposited until July the 4th of July.
That's so cool.
Right.
I told
and
my
the
daughter
form
about it.
and the form number's easy to remember. All you have to do is know what president he was.
45, 47.
Yep, he's president number 45 and president 47. So
Would
the
that
form
be the form number?
that is the form number.
And you would attach that to your tax return, and so then you got it going. And this is especially important for grandmas and grandpas who have grandbabies that just got born. You want to make sure that your kids put that on their tax return because the baby's got $1,000 coming.
That's right.
Right.
Right?
Yep.
The other thing that in 2026 is that charity is going to be deductible with, even if you don't itemize, up to $1,000 if you're single, $2,000 if you're filing a joint return.
Correct.
But they're taking away the deductibility if you itemize. They're going to take away 0.5%.
Right. Right. Yeah. So they're backing it away a little. Very, very, very little, but
Yeah, and it's so weird that, 0.5%, whatever. But the other thing is the SALT deduction is in effect for 2025. Why don't we talk about what the SALT deduction is and why it's important? People have gotten used to not itemizing, but now with the elimination of the cap of $10,000 and the new cap of $40,000, a lot of people may be able to itemize now, right?
Yeah. So under the first Trump tax changes that he did when he was president, number 45, he did the bill that eliminated the amount of itemizing up to $10,000 of your taxes. So on the Schedule A, you were capped at $10,000. That was for your income taxes, your property taxes, your sales tax. Withholdings, and so it was capped at $10,000. And for a married couple, that was really, my gosh, here we are in Western New York, and if you pay property taxes of $16,000 a year, your income taxes, you were really shorthanded. And so you were cuffed and you weren't able to itemize because you were capped at $10,000. The rest of the taxes that you paid just, they would help New York, but it wouldn't help anywhere else. And so went itemizing. And so you were, some of my clients, we did married separate to help to alleviate that, some of it, not all of it, because it still was limited. And so now we're up to $40,000, which opens the door for many people who were not itemizing to take advantage of itemizing again. So you certainly want to take advantage of that and look at all of your charity and your taxes and your medical. And so you really, things that you were not considering, now you want to consider again.
Right. So let's say that you had medical expenses of $12,000 and your adjusted gross income is $90,000. They're going to take away 7.5% of that as a floor. So you'd only get a medical deduction of $5,250. If you had New York State taxes of $5,000, property taxes of $8,000, you got $13,000 rather than $10,000, so an extra $3,000. And the interest rates had gone up, so the interest that you're paying on your primary or secondary mortgage, that's now deductible, and your charity. So when you add that all together, if it's larger than your standard deduction, then you would itemize. And especially on New York State, you would itemize as well. So don't shortchange yourself because the SALT deduction is now up to $40,000,
Yep.
right?
Yep. Want to go to a break?
I will in 1 second. I want to very quickly, if you were born before 1960, your required minimum distribution is age 73. If you're born in 1960 or later, the RMD has been moved to 75. So I wanted to let you know that. We're going to take a short break. 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And we're going to talk about a New York State letter that's coming. Is it a New York State letter on the other side, and what to do to get ready. See you on the other side.
And we're back.
Yeah, I had told Esther about a letter, and so I was at the office the other day, and somebody had emailed me a New York State letter, and I know you see these all the time, and so New York State mailed them a letter, and it said that your federal adjusted gross income was $140,000 and your New York State was 110 and it doesn't match, and you owe New York State $2,700. I'm like, what? So I brought up their tax return, and the $30,000 subtraction was their Social Security. And so naturally, that's the law, is that you subtract the Social Security on New York State. My point of telling you this is, if you get a letter, do not just pay it, because $2,700 is a lot of money. And so I can't tell you how many people would just see a letter from New York State and instinctively just pay the $2,700. But what it was, I was just gobble-stoppled that New York State, I've never seen them send a letter and say, why did you subtract your Social Security? I mean, isn't that taking it a step further than you've ever seen before?
Obviously they know that's not taxable, right?
Right.
Yeah.
Anyway, all right. So I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. When you are deducting your tip income this year, these are the categories that qualify: beverage and food service, entertainment and events, hospitality and guest services, home services, personal appearance and wellness, recreation and instructions, and transportation and delivery. That's what the IRS is saying the category of tip income that would qualify for the tip exclusion would be.
Yep. So
And the other thing is, when you get your W-2 this year, in box 12, you're going to see some. For the overtime. Some of the employers are, well, actually, all the employers are not required to list what your qualified overtime is. But if you work for an employer who did, that would be called a TT in box 12. And TP is a qualified tips. And TA is an employer contribution to the Trump account for the kids, because the employer can contribute to that Trump account as well. The bottom line is, these are big deductions. The tip income can go up to what, 25,000,
Correct.
and the overtime.
Is 12.5 for single, 25,000 for married.
Okay, all right.
And wait, I got on your tip income. You said it's qualified tips. Well, what tips don't qualify? I mean,
know.
isn't that interesting? Because, one thing we've done a lot of
talked about
research.
this.
We've done a lot of research on this. And if you go out, you're a banquet server and say you work
big point, yeah.
just at a banquet hall doing weddings and stuff like that, your tips you get there do not count, because that's considered a service charge, not a tip.
In other words, if it's a forced tip, it won't qualify.
Exactly.
Right.
Yep.
Okay.
So
Why don't we go to the text?
Yep, the text says, I own a small business in Buffalo, and we recently put together a website to sell our products. We have started selling and shipping our products to new customers out of New York State. Should we be charging new customers out of state state sales tax? And so that's a really good question. It's from Carl.
Chris, you have a background in that.
I do. So because they're not in New York State, you don't charge them sales tax. It's up to them to pay what's called a use tax when they file their tax return, or if they have a business, when they file their business's sales tax return. So, and also now if you're doing it online, most companies who do the sale for you do the sales tax and would submit it for you by yourself, so you don't have to.
This
So,
guy.
but if you're handling all the transactions, no, don't charge them sales tax to out-of-state customers.
Right.
Only
In other
people
words,
in
you
New
would
York
not
State.
charge New York State sales tax.
Yes, correct.
And then it's up to them to deal with, like you said, the user fee.
Yes.
Yeah.
All right, let's go to the phone. We got Bud. Hey, Bud, how can we help you, sir?
Two quick questions. Number one, on the 1040 SR form for 2025, on page 1, the upper right-hand side, there's a new box here. It says check here if your main home was in the USA for more than half of 2025. So I'm assuming if you live here all year, they want you to check that box?
Yes.
Would be correct.
Do we know why they added that box? No.
Yeah, that's the second question.
Can you repeat that? Because repeat what he said so I learn. Repeat that, Bud. I'm sorry.
Oh, okay. On the 1040 SR 2025 form, on page 1, the upper right-hand side, there's a new box there, area. It says, check here if your main home was in the U.S. for more than half of 2025.
Uh-huh.
So I'm assuming if you lived here all year, they want you to put a check mark there.
Right.
Yeah.
But it doesn't really affect the tax return. It's just information.
Information. But isn't that interesting?
And so if I lived here all year, I should check it.
I mean, it would not cause a problem on the tax return.
What do you think,
But
Chris?
it would
would
be
check it,
something
I
they're
Yep.
asking.
Oh, yep. Chris says check it. Esther says check it. And
Okay.
you got it right.
And then the second question is, why is this all of a sudden on the form? It's never been there before. Why would they do that?
One never knows. You know,
Big Brother is
it's
watching.
It's just information gathering, I'm sure. And it could have something to do with immigration, right?
Okay, that makes
Well,
sense.
it could also be a lot of people said they're leaving the country, but if they're still U.S. citizens, they have to pay tax on worldwide income. So
Worldwide income.
if you don't check that box saying you lived here for 6 months, they may be checking you out to see that you're claiming all your income on your tax return, even
It
money.
makes a lot of sense. It's a great answer.
Yeah.
Well, I appreciate it. You guys are right on the stick there. I wasn't sure it was new, and I figured I better call the experts and get the correct answer. So thank you very
All
much.
right.
Thanks,
You're
Bud.
welcome.
Thanks
Bud.
for the information.
All right. And then we have a text here.
Yeah, it says, Esther and crew, whatever happened to the Trump tariff rebate? Thank you, Mark in Buffalo. I know people call the office all the time and ask about this, and Chris is right on the stick. It's people who don't have to file. He's sort of telling them to file in the event that this comes to
Well,
fruition.
nothing yet.
I just read an article on this about an hour ago, and they are planning on issuing checks up to $2,000, and they're saying the income would be under $100,000 to qualify, and they're going to be using a tax return to determine that. So even if you have zeros, you might want to file a return just to make sure that you have your information in with the federal government.
Right.
Right?
Yep.
And the other thing is, they're talking about capping. Trump was just on X saying that his goal is by the 20th of January of this year to cap interest rates on charge cards to 10%.
That would be.
I was
1 year.
talking to you about that. Yeah.
for 1 year.
Yeah, because he says, the people who, the middle class, the middle lower, middle upper, whatever, who are just trying to make it, shame on the credit card companies for charging 30 to 40 high usury fees. And
All
people
right,
are,
so the
yeah.
credit card companies said the reason they charge so much is because there are large defaults on credit cards. And so this is to help cover their losses from defaults on credit cards. And they said that what would happen if this went into, and I think he's going to do it, January the 20th, what would happen is that they would be tougher on credit card that they would allow people to have, and they would start canceling credit cards.
Yeah, well, they're making the
So-
good people pay for the bad people.
Well, that's how everything's going around in this
yeah.
world
I
anyway.
don't know if they're talking like disputes. There was recently, I had a credit card dispute, and my credit card company completely did not have my back. There was not a lot of, they didn't. I even tried appealing it. I don't know if, anyways, there's a lot to that story, but
You mean they double charged you?
Yeah.
Okay, so getting your documents together before you file. Unemployment. Why do I even mention unemployment?
Well, unemployment sometimes mails out the forms and sometimes they don't. So your best case, if you're on New York unemployment, log on to your account and print your 1099.
Well, if they don't send it, if I don't get it, they don't send it to me because they didn't mail it. Can't I just ignore it?
Yeah.
Not really.
Not
right?
really. No.
All right. I'm Esther Goliath, the tax lady, 8030930, 8030930, star 930 on our cell phone. You can text us at 716-8030930. And we're going to take a short break for the news. We'll be back on the other side.
Hey, to us, you are family. I'm Esther Goliath, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. Okay, so, and love to hear your questions because we want to help you and want to make sure that you don't miss anything. Getting ready to file, though, before I take the text, your Social Security is still taxable. I don't care what you heard on TV. They did give the deduction for seniors over the age of 64 of $6,000 and $12,000 if you're filing a joint return, provided your income is not over the thresholds. But Social Security still is potentially taxable, right, guys?
That's right.
Yep.
Yep. Absolutely. And so you got to make sure that you don't get that in your thinking that your Social Security is not taxable, because it is potentially.
Right, and that's what I'm concerned about, is that somebody might think, well, I heard it's not taxable. I'm not going to put it on my tax return.
Yep.
Right.
John's been holding for a while. Shall we go to him before the
All right,
text?
let's do John. Hi, John.
Hi, good afternoon. Thanks for taking my call. My question is, a year ago Christmas, visiting my brother in Florida, was in a bad accident. And I stayed in Florida all of 25, various doctors, hospitals, et cetera, et cetera. I won't go through that. But I have no income. I will be getting no W-2s. The only money I'll be getting is from, my interest statements.
Right.
And my question is, do I need to file federal?
Depends on
Okay,
how much
so-
your interest is.
It's not going to be,
Much.
four or five, maybe $500.
The only reason I would do a tax return, and even if it just says it's for information, they are threatening to give this $2,000 tariff rebate, and you would hate to be the person that didn't file your return and they don't send you the rebate, and then it closes up, and it's nothing to do a little information tax return. That's the only. Would you guys agree with that?
Yes, I would.
So my question
We charge
on that
$50.
subject is there anything I qualify for by not having any income?
No. Had you taken money out of your do you have any taxable IRAs?
No.
All right, so you had no other source of income.
Right. Well, I got money
And
in Florida from the insurance company, which isn't, apparently I don't get, any W-2 on that or whatever. It was, they took care of my staff.
It was not a wage continuance, right?
Right.
Okay, so there's nothing that you would be entitled to except for this tariff. And then, of course, if they are going to cap the interest rates at 10% the middle of January, but that would be it.
And we're saying file it just in case this Trump tariff comes along, the continuum, and you'll need to have a return on file for it.
Right.
Oh, okay.
I mean, that's from what we've seen in the past. They used the tax return in the state of New York as well to generate the money that they're sending out. So it'd be a shame to, just for a little form you have to fill out, that you wouldn't be in line in the event of. And I do think they're going to do it.
Oh, okay. What do you mean by wage continuance?
All right. In other words, if you were ill and they continued to pay your wages because you had a policy that made you whole for your inability to work, that would be taxable.
Okay. Well, yeah, they just paid me
pain and suffering.
I got like eight. Well, I got my salary.
Okay, then it's taxable.
Well, am I going to get a 1090? I mean,
you're going to get you will get a W-2.
I mean, did they withhold Social Security and Medicare?
No.
Okay, so you'll probably get a 1099 miscellaneous box 3 for other income.
I mean, actually.
All right, but here's the thing. You want to call us on Monday so we can do the research, because certainly if it was wage continuance, it's going to be taxable unless you made the premium payment. So we don't want you to base your tax return on a conversation that we had over the phone.
Yeah, and if it was 8,000,
we want to make sure that we know what you're talking about and you know what we're talking about, and we'll do the research for you.
And if it's 8,000 and he's under 65, he'd get earned income credit, but
right.
Yeah.
Oh, okay. And my last question would be then for the STAR program, I need to file a New York State tax, right?
Yes.
Right.
Be qualified.
Well, actually, you bring that in to them in the federal return, because it sounds like it's a taxable wage continuance. And Tiffany's right. If it was only 8,000, you would qualify for earned income credit if you're under the age of 65. Are you?
62. So I just make it. But
right. So you would get that refund.
But I mean, I got hurt in October of 24. So they started giving me my lost wages, and I didn't get anything to file last year.
Well, that's why I said let's do the research, find out what you have, and if you'd been making your own premium payments on that wage continuance, it wouldn't be taxable. But there's so much if, and, ors, or buts. So call us 632-7886, and we'll be very happy to help you.
632-7886.
The phone number is 632-7886.
Thank you very much, and have a happy New Year. Thank you very much.
You too. Hope you're
Happy
feeling
New Year to you
better.
too.
Really.
All right. So Social Security, you want to make sure you have your Social Security statement and put it on your tax return. W-2s from all your employers, even if you worked a week at an employer, it's still taxable income. You want to make sure you get that. Self-employment, did you get a 1099-K form or a 1099 NEC? All those have to go on your tax return, and you get to reduce the amount of money you got by any expenses to produce that income, right?
Yeah.
Interest and dividend statements, those come out later. Right? Some of these things don't come out till March.
The brokerage statements.
And so you can't file without them.
Right. Yep.
Sale of capital assets, that's all on your brokerage statement. And one of the things I see with clients is they say, well, I didn't sell anything, so I'm not going to report anything. My broker just moved around the stocks. What does that mean, you guys?
That means that you have to file a Schedule D. And I had
Because
somebody
he sold it.
Yeah, I had somebody call the other day, and he does Venmo, and he did the same thing. He goes, I really didn't sell it. It just moved around my Venmo, but he also had to file.
Right. I mean, you may think your broker didn't sell anything, but if it went from ABC stock to DDD stock, that was a sale, and it has to be reported. Your pension and IRA distributions, right? Did you do your RMD? And if you haven't done your RMD last year and you're over the age of 73, you're going to be penalized potentially. You got to take that. You got to take that distribution. If you're turning 73 in 2025, you can double dip that first year, but you have to deal with it, or else there's a penalty.
Yeah, well,
Speaking of the accounting for your overtime pay, which is really, really important.
Yep.
Right?
Right. Yeah. You got to bring in, you got to make sure, especially for 2025, you bring in your last pay stub, because employers didn't have to properly record the overtime. And so your last pay stub will give your tax preparer or yourself a way to what to do, but it's not the whole overtime. It's just the extra amount you got paid over your hourly rate that is deductible.
All right. So if you're making $20 an hour, overtime was made it 30. You have to back off the 20. You only get to deduct the 10. Right?
Right. Yep.
Okay. All right, what do we have here next?
There's several texts. The first one says, Esther and crew, whatever happened to the Trump tariff rebate? Thank you, Mark.
I just did that.
Oh, yeah. Okay, then we'll go to the next one. Somebody says, I guess those tariff checks will happen when the midterm elections come around, is what his thoughts are. And then finally, well, there's a few other texts, but the next text is, can you go over the new overtime rules again, how to figure out limits? Love your show.
All right, Chris, you want to, I think we kind of did, but let's go step by step.
Yeah, so overtime, if you're single, 12,000 up to 12,500, you'll be able to back off as income. If you're married,
if you're single.
Right, if you're single. If you're married, it goes up to $25,000. If you're married separate,
it has to be for actual overtime. In other words, just because you worked overtime doesn't mean they'll let you take the $25,000. It has to be your actual overtime pay that you got, up to $25,000 if you're filing a joint return, up to $12,500 if you're single, right?
Right. Yep. And we actually, we had somebody come in who was a correction officer, and they were told a lot of their overtime isn't going to qualify because it's mandatory. They had to work it because how everything was going with New York State with the corrections officers. You know, they had to work 12 or 16-hour shifts, and so that counted as mandatory as a schedule, not just overtime. So it's going to be very complicated with figuring out the overtime this year.
And interestingly, this year, there's in the law is that employers didn't have enough time to put this together, and so some of the onus can potentially fall on the taxpayer to calculate it. If the employer has had a time to put it together and calculate it on its own, it's going to be in box 12 or 14 with a TT.
12 TT. Yes.
It's going to be in box 12 of your W-2 with a TT, and that'll tell you what part of your overtime is tax-free, and so that'll make it easier for you and maybe the accountant. But that potentially will not be there this year, and you'll have to take that on your own and calculate it, and so there could be some work and bookkeeping involved.
Yeah, a lot of bookkeeping. Seniors, so we're talking about the overtime, we're talking about tips, but seniors are going to get just a deduction, not a credit, and it has really nothing to do with your Social Security. Not really, not directly. So you get a subtraction of an additional $6,000 if you're 65 or older, and $12,000 if you're filing a joint return. How about if you're married separate?
0.
0. That's right. So if you're somebody that likes to file married filing separate, you would lose that deduction altogether. So you get your standard deduction, your increased standard deduction for being over 65, and you also get the $6,000 or $12,000 additional deduction. So it means you have a whole bunch of money that's not going to be taxed. And that may eliminate the taxability of your Social Security, but it may not in many situations, right?
Right. Yep.
All right. I'm Esther Goulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We're going to take a short break. We'll be back on the other side with your comments, questions, and
we'll
phone
go.
calls.
We'll go to Mike first when we get back, if you don't mind.
The bills make me wanna kick your heels up and throw your hands up and throw your head back and
I hate it that it's going to be another game tomorrow, but I'm so thankful. You know, you just get that yin yang kind of thing. I love them. I want them to win, but I don't know how you do it, Chris, quite frankly.
Well, I'm in Jacksonville, so no kidding. I wish.
All right, we have Mike, who's been waiting a long time. Hi, Mike.
Hi, Esther. The question that I have for you is, once I start taking my RMDs at 73, how can I cut down or eliminate the taxes that I have to pay? Is there an amount that I can't make over? I'm 71 now.
It's really kind of complicated. Are you single or married, Mike?
Single.
Okay, so you're going to get your standard deduction, which is almost $18,000, right? Then you're going to get an extra 2 for being over 65, so now it's 20. Then you're going to get $6,000 deduction for the senior thing. So now you're at 26,000 before any of it's taxable. Okay. So now, how much money did you have to take out of your IRA?
I didn't take anything out yet, but
how much will you take out?
The minimum amount.
How much? All right, give me an idea. How much is in your IRA total?
Let's see, probably almost 300,000.
All right, so and you're single, and you're just going to right now start taking the distribution, right?
Yeah, when I have
you have to take out around $11,000. So you have Social Security and your RMD. Any other source of income?
Interest in my pension.
And how much is your pension?
16,000.
Okay. And your Social Security is how much?
Taxable Social Security or total?
Well, your total amount of Social Security you get.
Let's see. Last year it was 33,000.
Okay. So you're still going to pay taxes on your Social Security. Your $6,000 helped, but it didn't take the whole liability. So the only thing that you can do is you can itemize if you have itemized deductions. That's number one. Number two, are you a philanthropist? Are you somebody that likes to give to charities?
Not really, no.
Well, if you did, you could do what's called a qualified charitable deduction, and you could take your $11,000 if you wanted, if you were somebody that wanted to, or $5,000 or $2,000, and do a direct rollover from your IRA to the charity. That would have made it completely tax-free. So let's say that you are a churchgoer partially, and 2,000 is your number. Then you would check with your broker and have them do a qualified charitable rollover from your IRA to the charity, and that saves you paying taxes on that distribution.
Okay, and if I decide
from that,
to keep it?
it would be your if you don't have a small business or anything like that, right? And you're not working,
right? Yeah, I'm retired. Yes.
That would be pretty much it.
Yeah, I mean, even if you just give $1,000 through the QCD, that will help that will save on income on that $1,000. It will help lower your social taxable of your Social
Right.
Security. So it could save you a couple hundred, $250, $300 on your tax return.
Right.
Oh, wow. Okay. I'll have to think about that. Can I?
So what you need to do is you need to pre-plan. If you're a giver, or you give whenever you give, you just contact your broker. They send the money directly to the charity or the church, and you don't have to pay taxes on it.
Like, how about if I give the money to my grandkids instead? Does that count?
No, that's
Good
lovely,
question.
but it-
Good grandpa.
yeah.
No, it has to be a 501c3, so they would have to be a 501c3.
They'd have to be a charity, which they kind of are
but
many times,
legally,
right?
they'd have to be a charity.
Yeah.
Okay. Yeah, I'm looking for loopholes,
Good
I don't blame you. Don't blame you. But the QCD is really a great thing if you're somebody that gives to charity,
Okay.
So, okay? Thanks for calling.
Great.
Happy
Thank
New
you
Year.
very much.
Happy
Thank you.
New Year.
All right, what else we got there?
So the next one, again, please. When might the credit card interest change? I have a former store credit card that's at an interest rate of 32.99% and others in high as 20% interest. When might the rates change? This could be huge for people. Thank you.
I just read it an hour ago. He just did something on X that says that by January the 20th, he'd like to have the maximum interest rate drop to 10% on credit cards for 1 year. Again, this could be pie in the sky, but this is what he put out. And, he has a tendency to do what he says.
Yes.
If I don't laugh, Chris is saying to do the before the next text to do the phone call.
So we got Mike from West Seneca.
Okay, how you doing, Esther?
Michael.
Hey, my buddy Mike, how you doing?
Still behind on taxes. It's all because of bad disc in the back and then the hip went. But anyhow, I got a mess of paperwork that I've been going through, and I actually found something from a regular insurance company, like car, house, or whatever, and they gave me a 1099 for interest on something. I'm digging and I can't find it, and I don't want to make a bigger mess. Does that make any sense to you? I called the number, have not gotten a response yet.
All right, so you run this by me. You have what?
Interest statement?
Gave me a
you have an
1099
insurance?
with an interest payment, supposedly, that I had received. Now, this is a regular insurance company, like car, homeowners, etc.
What is the form titled? What do they call it? A 1099 INT, a 1099 DIV?
You know what? I was digging for it, and I don't want to make too big a mess. I can't find it while I was on hold. 'Cause
Okay.
I still got paid.
Usually, Mike, there is it's accumulated interest on an annuity, and until you take the distribution, it's not taxable. So all I can say, I can't figure out what it could be without looking at the form.
Did you receive a life insurance policy because somebody passed away?
Not that I know of. You know.
Okay. I was thinking maybe that's where
somebody
the interest
was nice
came
to
from.
me, and I didn't realize it.
Well, if you never get it, then they weren't that nice, right?
Right.
But Mike, where we are. Just when you get the form, call us and we'll figure it out.
Yeah, and I gotta tell you, Chris this week has been struggling with back pain, and the week before it is not easy, and so, anyways, I can commiserate with you.
Okay, I will try calling them again and see if I can get an answer, but I will call you during the week then.
Yeah, we'll help you. All right? All right. I'm Esther Gillies, the tax lady from EG Tax. All right. Thanks, Mike. We have any other texts that we want to do?
Yes. Hi, Esther and gang. How will the new changes affect the way that required minimum distribution is taxed? I'm 78 years old. Thank you, Pat.
We just went over
Well,
our...
you're going to get the 6 or the 12, $6,000 deduction if you're single, $12,000 if you're a married filing jointly and your income's on 150,000 or less. Otherwise, it phases out till it gets to 300,000, and then provided you're age 65 and or older, and so it's going to be another deduction that you can use to reduce your overall income.
So they're going to pay less tax on their RMDs, which is great. The next text says, should married couples who make around $150,000 income range consider filing separate to take advantage of the Trump tariff rebate? Thank you very much.
You mean so that you both get it?
They're not there here to
I don't
ask
think
the question.
I don't think it happens like they'll cut it in half.
Right, and we haven't gotten the guidelines, so.
Right, and we don't have the guidelines. We only have the promise, but we don't have the guidelines.
Yep.
Yeah.
So, but everything that I've seen from all the changes that have happened, they don't really want you to file separately and still get the deductions. So that's like on the tip income, on the overtime income, and the $6,000 and $12,000. If you're married separate, it's they are eliminating the deductibility. So be very careful. And listen, because listen to us on Saturdays, because as soon as we find out, we let you know.
Yep. And there's one other tax is New York State income tax for 2025 tax year, giving extra $6,000 per person over and above the standard deduction if married filing joint, if age 65 and over.
All right. If you are a senior in New York and a taxpayer in New York, and you're taking the deduction for overtime or tips or the senior deduction, the state of New York is not allowing it in 2025. In 2026, the governor says she's going to put it in her budget, the tip income. So this year for sure, if you're taking that as a deduction, you want to make sure when you do your New York State return that you add it back in, or you're going to end up with a big bill from New York State. Next year, she's saying that just the tip income she's going to put in her budget, but we don't know until it happens. But until next week, I'm Esther Golias, the tax lady, with Tiffany Fabian, Christopher Fabian. Happy New Year. Thanks for calling.
Go
if you
Bills.
need us during the week, go to egtax.com. Thank you.